Okay, let's talk about the Fibonacci tool. You know the one. It's in pretty much every trader's toolkit, right? But let's be real for a second. It can be super confusing. You see people drawing it all over the place, a million different ways, and it just looks like a mess. Well, today we're going to cut right through all that noise. We're going to build a simple, rule-based system that gives you laser-like precision for your entry. And that right there gets to the heart of the problem. The truth is, most traders are using this tool, well, completely wrong. And it's not really their fault. You get all this conflicting advice online, right? Nobody agrees on which levels matter. But the biggest killer? Guessing where to draw it from. Where do you start? Where do you end? That guesswork, that ambiguity, that's what leads to confusion and, you guessed it, losing trades. But what if we could just get rid of all that guesswork? That's exactly what we're going to do in this explainer. I'm going to walk you through a complete step-by-step system. No more confusion, no more ambiguity. We're talking simple, clear rules that'll turn this powerful but often misused tool into a seriously consistent and high-probability strategy. So what are we actually trying to do here? What's the goal? Well, take a look at this chart. Any trending market kind of moves in 3 steps, right? You get that big initial push, then it pulls back a little, and then boom, it continues the trend. Our whole goal, the only goal of this system, is to use the Fibonacci tool to find the exact bottom of that pullback. See that green dot? That's what we're hunting for. That perfect, low-risk, high-reward spot to jump on board the trend. All right, to get to that pinpoint entry, we've got to build a solid foundation first. This next part is all about clearing up the chaos. We're going to tackle the 2 biggest mistakes that trip traders up when they use Fibonacci, and we're going to do it with just 2 super simple but really powerful rules. Okay, rule number 1, we're going to simplify the tool itself. I mean, forget all those endless arguments you see online about the 23.6 or the 78.6. Just ignore them. For this system, we focus on one and only one high probability area. We call it the golden zone. It's that sweet spot right between the 0.382 and the 0.618 levels. That's it. That's our entire target area. And this right here, this is the big one. The single biggest mistake I see traders make. It's what I call the anchor problem. I mean, where do you even start drawing the line? From which low to which high? If you pick the wrong points, your golden zone is going to be completely off, and your whole analysis becomes worthless. It's pure guesswork, and that's just a recipe for disaster. So what we need is a system, right? Something objective, something rule-based. And guess what? We have it. It's the fractals indicator. Now, this little tool automatically finds those key reversal points for you, but we're going to give it a little upgrade. So first, you'll add it to your chart. Then, and listen up because this is the most important part, you're going to go into the settings and change the periods from whatever the default is to 10. This one little tweak is what filters out all the useless market noise. And wow, just look at the difference this makes. On the left, that's the default setting. It's a mess, right? Fractals popping up all over the place, total chaos. But on the right, with our period set to 10, look at that. Clean, clear. You only see the major, significant swing points. And those become our perfect objective anchor points. No more guesswork. Problem solved. Okay, before we move on, I have to lay down one critical, non-negotiable rule. This entire system is designed for one thing: pullbacks in a clear, strong trend. Look at the chart on the left. That choppy, sideways mess? This system will not work there. Don't even try it. Your first job always is to find a market that's clearly moving in one direction, like the one on the right. We're here to join an existing trend, not to predict a new one out of chaos. All right, foundation is built. We know how to find a strong trend, and we're using our special fractal setting to draw a perfect golden zone. Honestly, that alone is a pretty solid strategy, but we're not aiming for solid. We're aiming for sniper entries. So now we're going to learn how to stack the odds so far in our favor that it almost feels unfair. And we do that using the power of confluence. So what the heck is confluence? It's actually a pretty simple idea. Think of it like you're a detective building a case. You're looking for multiple separate clues that all point to the same suspect. In trading, we're looking for multiple independent technical reasons that all scream, hey, this specific price area is super important. We're literally stacking up pieces of evidence, just like these blocks, on top of our golden zone. And the more evidence we can stack, the more confident we can be in our trade. Our first piece of evidence, our first layer of confluence, is a total classic, the good old support and resistance retest. You know how this works. An old ceiling, once you break through it, becomes the new floor. So what we're looking for is a clear previous resistance level that just so happens to be sitting right inside our golden zone. When price comes back down to test that spot, that's our first major clue. Okay, for our second layer of evidence, we're pulling out a big gun, the 200 EMA. That's the 200-period exponential moving average. Especially on higher time frames like the 4-hour, this thing acts like a magnetic, dynamic line of support during an uptrend. So the dream setup, the A+ setup, is when we see that 200 EMA line cruising right through our golden zone. That's a huge second piece of confirmation. And for our third and final layer, we're going to use something called the Anchored VWAP. It stands for Volume Weighted Average Price. Now, don't let the names scare you. All we're doing is telling the indicator to show us the average price that traders have paid since the start of this trend. We anchor it to that first fractal low, and if that average price line is also sitting inside our golden zone, oh man, that's just massive confirmation. It tells us we're pulling back to an area that the market has already decided is super important. All right, theory time is over. We have all the pieces of the puzzle. We've got our foundation and we've got our 3 layers of confluence. Now, let's put it all together and see how this thing works in the real world. We're going to walk through a case study on a 4-hour chart, step by step. Okay, step 1, identify the environment. First thing we see on this 4-hour chart is a nice, strong uptrend. Perfect. So we bring up our fractals indicator, remember, set to 10 periods, and it nails the major swing low and the major swing high for us. From there, it's simple. We just draw our Fibonacci tool from that bottom fractal to the top one, and bam, there's our golden zone, all mapped out. Now step 2. This is where the magic really happens. We start looking for our confluence factors. And wow, just look at this. It's like a textbook example. First, check it out, a clear support/resistance flip levels sitting right in the middle of our zone. Second, look at the 200 EMA curving up beautifully right into that same spot. And third, the anchored VWAP from the low, it's pointing to the exact same area. I mean, come on. That's our golden zone plus 3 other huge clues all converging in one tiny little area. That's a high probability setup if I've ever seen one. So, with the odds stacked this heavily in our favor, step 3 is easy. We just execute the plan, no motion, just rules. We place a limit order to buy somewhere inside that hot zone. We put our stop loss just below the golden zone, giving it a little breathing room. And for our target, we aim for the previous swing high. It's a clean, simple, mechanical trade plan. And here's how it played out. Price pulls back perfectly right into our little confluence hotspot, triggers our entry order, and then heads straight up to our take profit target, a perfect trade. That right there is the power of having a system. We took a tool that confuses most people and turned it into a precision-guided entry machine. Okay, so to make this super easy for you to use right away, we've boiled this entire strategy down into one simple, actionable checklist. Think of it as your pre-flight checklist before taking any trade, so you can follow the rules every single time. Let's just blast through it real quick. Number 1, framework. Is it a strong trend? Yes or no? Number 2, anchor. Use the 10-period fractals to find your start and end points. Number 3, zone. Draw the fib and find that golden zone. Number 4, confluence. Can you find at least 2 other reasons for that zone to hold? And finally, number 5, execute. Set your entry, your stop, and your target. That's it. It's a complete, repeatable process from start to finish. So there you have it. We've taken a tool that causes so much confusion and we've turned it into a crystal clear, rule-based framework for finding these amazing high probability entries. The entire system is right here in front of you. So really, the only question left is, are you ready to stop guessing and start trading with precision?